How do you view structured notes within the context of your overall portfolio within your asset allocation?
Sure. So it might be helpful to take a step back and look back to where we were prior to using structured notes. So like many firms, we allocate a substantial amount of our clients' assets to traditional asset managers. By that, I mean bonds, stocks, the plain vanilla type things. I should mention that we don't do any of that in-house. So there's no strategic wealth partners bond strategy or stock strategy. It's all third party managed. And we work with a number of different firms out there. The traditional asset classes, depending on a client's circumstances, might represent, call it 80% or more of their portfolio. And then we would also kind of complement that with alternative investments, which is probably the area where you see the most customization among our clients. Prior to using structured notes, many of our clients who didn't have the ability or the desire to invest directly in hedge funds or private limited partnerships that had large minimums and in many cases long liquidity lockups, we would put together portfolios that involved a lot of tactical asset allocation strategies. And what we found was it was very unpredictable to really gauge the success of these investments. And they tended to be fairly tax inefficient because there'd be a lot of trading. And the first time that you and I spoke and our firms talked about structured notes, which was probably back in early 2015, might have been even earlier than that, you introduced to us the concept of structured notes and how they could be put together to target a certain type of return that's derived from the stock market with some downside protection built in. And right off the bat, that sounded good to us, having some sort of objective way of getting from A to B without having to worry about a manager of a fund, reading the tea leaves properly. And as it happens over the years, our first note eventually became our firm's kind of flagship note product, which is a 3-year investment issued by a bank tied to the performance of the S&P 500. And it's a function of the volatility in the market at the time that we buy it and the credit quality of the underlying issuer. And you've helped us understand those factors.